What's up YouTube? Welcome back to my channel. For those of you that don't know me, hi, my name is Miguel and I'm a long-term dividend investor showing you my journey to a $100,000 dividend investment portfolio. And in today's video I'm super excited because I'm going to be showing you all my entire $10,000 dividend investment portfolio. But before we get into the video, be sure to subscribe to the channel if you haven't already. Leave a comment, I will get back to you. And don't forget to like the video, it helps out my channel tremendously. Now let's roll the intro. So if you've been following me here on YouTube or on TikTok, you know that I invest $100 every single week, sometimes more depending on what I can afford that week. But I go over all those purchases that I do here on my YouTube channel. So let's go over that really quickly before I reveal my entire portfolio. So this week I bought MRK. I bought one share of MRK at an average cost of $72.91. Now I'm negative a little bit on MRK, it's an energy sector stock, but I plan on holding this for the long term and I'm getting some pretty sweet dividends from them, so I do not mind dollar cost averaging into MRK. Then the next purchase, Costco. I bought $26.99 worth of Costco, giving me 0.71 shares. Again, I see myself holding Costco for 25 plus years, and I'm slowly dollar cost averaging my way into Costco, hopefully getting one share in the next month or so. But that does it for this weekly buys. Now let's get into my entire dividend investment portfolio. So going over my $10,000 dividend investment portfolio, I am in 9 of the 11 sectors of the stock market. We're going to hop into trackmydividends.com. If you don't know about trackmydividends.com, I did an entire video breakdown on this website. This is an amazing website that tracks all the dividends that you have. Even if you have more than one different brokerage, they got you covered. So go check out that video after this one. While hopping into trackmydividends.com, as we can see, the energy sector makes up about 9.89% of my portfolio. Communication services makes up about 11.64% of my portfolio. Technology makes up about 13.37% of my portfolio. Consumer defense makes up about 15.39% of my portfolio. Healthcare makes up about 15.02% of my portfolio. Financial services make up about 9.63% of my portfolio. Real estate makes up about 12.31% of my portfolio. And then this last one is ETFs, which make up about 8.85% of my entire portfolio. I thought that I would include the diversification of my portfolio because it's kind of important to know, especially when first starting a dividend investment portfolio. So now that we know how my portfolio is split, let's go into the individual stocks that I have in my portfolio. So as we can see, hopping into Robinhood, on the day I'm up $5.12 or 0.05%. My entire portfolio is at $10,292.21. On the week, I'm up $115 or 1.13%. On the month, I'm up $65.10 or 0.64%. On the 3 months, I'm up $886.90 or 9.43%. On the year, I'm up $1,392.25 or 15.64%. And then the all-time is going to be the same thing as the year because I've been doing this for less than a year now. But honestly, Robinhood was the first brokerage that I ever used and I've stuck to it ever since. I do plan on opening up my Roth IRA with M1 Finance and eventually moving my entire dividend investment portfolio to TD Ameritrade. But for the time being, I just don't think my portfolio is big enough to move yet, so I'm keeping it here for now. But hopping straight into it, as we can see, the first 2 stocks I don't really include in my portfolio because they're the free stocks that I got. One for signing up for Robinhood. The other one I got from someone else using my link. If you have not opened up an account with Robinhood yet, I will link it down below in the description. But the first one that I got using someone else's link was Coyote. Now as we can see, going to the year mark, I got it around $3 and I held on to it because I figured why not? If it goes up, it's cool, free money. And now it's back up to about $8.97, which is pretty cool. I just didn't really think anything of it. I just left it in my portfolio to sit. And the other stock as well that I got from one of y'all using my links, can't thank y'all enough for doing that, is this stock OGN. I didn't really do much research into it. I just saw that it's worth about $30. And just like with Coyote, I'm just going to kind of let it sit in my portfolio and just see what happens over the next year and then maybe sell it. But moving into the technology sector of my portfolio, I have Microsoft. I have 3.07 shares of Microsoft at an average cost of $211.65. I'm up overall $124 or 19%. What else can I say about Microsoft besides I think they're a long-term hold for 25 plus years? We use a ton of their technology today, and I do not think that they are going away anytime soon. But as we can see, they make up about 7% of my portfolio, which is why I stopped buying more shares of that. I don't want one stock going above about 7 to 8% of my entire portfolio. I let them make up about 8 or 9% before they've gone down since, because I do see them as a long-term hold, and I am going to be getting paid dividends regardless. So that's why I'm holding on to Microsoft for the long term. And then the next stock in the technology sector, Apple. As we can see, I have 4.93 shares at an average cost of $119.56. I'm up $27 or about 4%. Apple's a stock that I'm going to invest into because I do use their products like crazy. I have a MacBook, I have my iPhone, and more recently in the past month they've kind of gone down a bit, which I see it as them being on sale. So I've been picking up more shares here recently, trying to increase my holding in Apple, because I am going to hold them just like Microsoft for 25 plus years. And then the next sector in my dividend investment portfolio is consumer defense. I have Coca-Cola. I have 8 shares of Coca-Cola at an average cost of $49.06. I'm up overall $54 or 13% with Coke. Again, with Coke, they are kind of on a discount right now, dropping down a little bit, but they are the main contractor in the Disneyland parks. But they also own about 23 other products besides Coca-Cola themselves. They own Dasani, they own their own iced tea line. They have a lot of other things going for them other than just being the main contractor inside Disneyland parks. The next stock that I have in consumer defense is Hormel Foods. I have 12.06 shares at an average cost of $46.61. I'm up overall $27 or about 4%. Again, Hormel Foods is very volatile, but I do not mind that at all because they're a staple. They're a staple in the grocery stores that we all shop at on a daily basis. I can't hop on this enough because no matter what, I'm not going to be selling my shares in Hormel Foods. I'm just going to continue to buy the dip, dollar cost average my way into it, and collect those dividends and reinvest it back into itself. And then the next stock is Costco. I now have 0.76 shares at an average cost of $368.53. I'm up overall $8 or 2%. Costco is a stock that I should have first invested into when I was laying down the foundation for my dividend investment portfolio, but I was spending a lot of time getting into the real estate sector because that's what really interests me at first. But I see Costco as a no-brainer. Their business model is insane. They continue to pour money back into their company, and I do not think that they're going away anytime soon. So I'm going to continue to dollar cost average my way into Costco, hopefully getting about 5 or 6 shares by the end of the year. And the last stock that I have in consumer defense is Target. I currently have 1.10 shares at an average cost of $199.63. I'm up overall $34.43 or about 15%. I do think they did this crazy thing by making a grocery store into something way more. They've turned it into an experience that I know that a lot of people my age really enjoy making Target runs or Target trips. So I do see this as a great investment because I do shop there on a daily basis. And why not be part owner of somewhere that you go to all the time? The next sector that I have in my dividend investment portfolio is ETFs. Now with both of these ETFs, I do not put any more money into them because I invested into them when I first started dividend investing, when I was not too comfortable investing into individual stocks, because I do know that they charge about a 0.04% fee for using them, meaning that for every $100 that you put in, you're going to be paying about $4. I think it's a little bit less than that. I think I did the math on that right, but yeah. Anyways, I just think you can get more bang for your buck investing into individual stocks, but because I don't want to pay short-term capital gains tax on it, I'm going to wait about a year, and I might keep them because they do give great dividends. We'll see what happens when I hit a year with these ETFs. But the first one being SPHD. I currently have 14.46 shares at an average cost of $34.66. I'm up $161 or 32%. Now with SPHD, I bought in at an amazing time. As we can see going to the year mark, I bought in back in September around $32. So of course I'm going to have a great return on this. And I don't want to sell too soon because I don't want to pay that tax. But overall, this is a great ETF that I personally started with. The next ETF is PEY. I have 10.94 shares at an average cost of $16.54. I'm up $52.97 or 29%. Again with PEY, I bought in at an amazing time, around $14 or $15, and it's gone up ever since. But it sucks that I'm not going to really invest any more money into them because they are ETFs and I just don't feel a need for them personally, as I want to make some more aggressive investments. The next sector is real estate. I have Realty O as my first stock. I have 14 shares at an average cost of $60.32. I'm up overall $147 or 17%. As we can see, this is the biggest holding in my portfolio at about 9%, which I didn't mind at the time because I was buying the dip and I believe in this company. So I really took a leap of faith here, and as we can see, it's paid off. The next real estate stock that I have is AGNC. I have 13.8 shares at an average cost of $15.27. I'm up overall $47 or 22%. As we can see, their dividend yield is at 7%, which is really high, but they make up less than 3% of my entire portfolio. So I'm comfortable with taking on this risk. The next sector that I have in my dividend investment portfolio, I thought was consumer defense, but apparently is consumer cyclical. Wow, I said that way wrong. But anyways, we have GM. With GM, I have 2.38 shares at an average cost of $34.20. I'm up $68 or 48%. I bought into this when I first started investing. To be honest, I thought they had a dividend, but then they cut it, but then they reinstated it. It's a whole big mess, but I'm up pretty solid with them. So I'm going to keep them for about a year and then probably sell off. The next stock that I have in this sector is NIO. If you don't know who NIO is, basically they were supposed to be the next Tesla out of China. I kind of FOMO'd into this stock, but nonetheless, I have 5.20 shares at an average cost of $55.63. I'm down overall $62 or 21%. Now, of course, I'm already down, so might as well hold on for the long term. See what happens over the next year or so. But this is definitely one of my biggest losers. And I'm not too worried about this, but I'm just going to stick to my golden rule of investing into dividend stocks because they do not pay a dividend. I was just investing into them because I didn't want to miss out. But I kind of learned my lesson from this. And I'm just going to stick to my dividend investment portfolio. The next sector I have in my dividend investment portfolio is communication services. I have AT&T. I have 17 shares at an average cost of $28.17. I'm up about $15 or 3%. Now, since the news that came out with AT&T selling off their HBO to Discovery and then cutting their dividends in half, a lot of people have sold out of their position on AT&T, but I'm currently up and I'm getting paid dividends regardless. But I do believe that this is going to make their dividend yield safer because it did sell off all of their debt to Discovery. So that's kind of a positive thing in this. And since I'm keeping this, I'm going to get 6 or 7 shares of the new company, which is pretty sweet. We'll see what happens with that. But yeah, I'm not buying any more new shares of AT&T. I'm just going to keep it for the year, see what happens, because who knows, their dividend yield is supposed to be safer and they're still paying a dividend, so why not keep it? The next stock is Verizon Wireless. With Verizon, I have 12 shares at an average cost of $57.33. I'm down 70 cents or 0.1%. Verizon Wireless is a company that I plan on keeping along with AT&T. I do think that they are the two giants in the communication services. I do think that they are the two giants in the communication service sectors. I'm not worried that I'm down right now. I know that Verizon Wireless is very volatile, as we can see from the past 5-year mark. But again, I'm a dividend investor and I'm here for the dividends. And as long as they're going to pay their dividends and they're going to continue to grow and put money back into their company, I'm here for the long term. The next sector that I have in my dividend investment portfolio is healthcare. I have Johnson & Johnson. I have 2.05 shares. I have an average cost of $156.78. I'm up overall $17 or about 5%. Johnson & Johnson is a healthcare company that I plan on holding for 25 plus years. So I'm just going to continue to dollar cost average into them. I see them on the same level as Microsoft and Apple in their own regard. But yes, Johnson & Johnson owns and is in so much of our supermarkets and stores. So I believe that they are a long-term hold for 25 plus years. The next stock in my healthcare sector is Takeda Pharmaceuticals. I have 24 shares at an average cost of $16.98. I'm down overall $2 or about 0.65%. Takeda Pharmaceuticals is a company that I bought into for the dividends. They're at about a 4% dividend yield, which is higher than Johnson & Johnson. So I kind of wanted to off-balance that a little bit. But hindsight is 2020. I probably would not have invested into this stock if I knew that they paid their dividends every 6 months, which is pretty crazy. I didn't know that stocks like that existed. I thought it was only quarterly or monthly. But yeah, that was a nice little surprise, I guess. But for the time being, I'm probably not going to buy any more shares of Takeda Pharmaceuticals because the next stock, MRK, has slowly become my favorite. I have 11.67 shares at an average cost of $77.99. I'm down overall $58 or 6%. Now, I'm not worried about this at all because I'm getting paid some pretty sweet dividends from this company. They just have a split off from a sister company that's getting into beauty product, and because at the time I had 10 shares, I'm gonna get 1 share of that new company, which is pretty sweet. But yes, overall, I do not care that I'm down negative in this company because I see them as a long-term hold, and I'm gonna continue to buy shares to collect those dividends and buy more shares, so that way when it does go positive, I will be up on paper a lot more. The next sector that I have in my dividend investment portfolio is energy. I have Pembina. I have 9 shares at an average cost of $25.03. I'm up $62 or 27%. This is just a good old-fashioned energy sector stock that I first invested into when I was in this sector. I'm collecting sweet dividends from them and I'm not going to look back. The next stock that I have in this sector is OKE. I have 8 shares at an average cost of $41.51. I'm up $110 or 33%. Again, I think I may have just gotten lucky, but I did my research, and these stocks that I invested into, I've been getting great returns in this energy sector, and I'm just going to continue to collect these dividends. But OKE, I really like this stock, and I plan on buying more to at least 10 shares. And the last stock in this sector, EPD, I currently have 11 shares at an average cost of $20.96. I'm up $42 or 18%. Like I said, the energy sector is killing it for me, and they all do pay some pretty sweet dividends, with EPD being the highest at 7.32%, which is the most aggressive energy sector stock that I do have. But I absolutely fell in love with this sector in my dividend investment portfolio, and I plan on making this about 15% of my portfolio. And the last sector in my dividend investment portfolio is finance. The first stock that I have is Chase Bank. I have 2.16 shares at an average cost of $122.92. I'm up overall $92 or 34%. I just see Chase Bank as a powerhouse, and I've gotten a great return so far because I saw a great time to buy in when it fell below $100. So I'm just going to continue to dollar cost average my way into Chase Bank because I do see them as a powerhouse, especially being in California when almost everyone has Chase Bank apparently. So why not invest into them? Because they do pay a pretty solid dividend and they're continually growing year to year. The next stock that I have is Main Street Capital. I have 9 shares at an average cost of $35.83. I'm up overall $53 or 16%. They pay about a 5% dividend yield. They are in the investment service sector, meaning that they do loans and help businesses out. They've been paying a great dividend to me for the past 5 or 6 months now. I'm not complaining at all and I'm pretty happy with the stock. And then the last stock that I have in the finance sector is Prospect Capital. I have 26.37 shares at an average cost of $6.16. I am up overall $79 or 48%. Going down, we can see that this is the highest dividend yield that I have in my portfolio to date at about 8%. And they've been paying out this dividend every single month for the past 7 months that I've had them. But again, we want to make sure that they make up less than about 2% of my entire portfolio. They're going over about 2%, sitting at 2.34%. But that's totally okay because I don't see them going down anytime soon. I'm really happy with this investment. I see Prospect Capital as well as AG&C as my riskier investments, and the two together make up less than about 5% of my portfolio. So that's why I'm comfortable with this risk and having such high dividend paying stocks. But that is my entire $10,000 dividend investment portfolio. I hope that y'all enjoyed this video. I know that I loved watching these videos when I first started investing. I still watch these videos. I love watching everyone else reveal their entire portfolios, and I hope that helps some of y'all in your dividend investment journeys. But that's all that I have today. I have a ton of videos on my YouTube trying to help dividend investors, trying to help the average guy like me. And if you want to see me get to a $100,000 dividend investment portfolio, don't forget to subscribe. Leave a comment on this video if you have any questions, or if you just want to say hi, or if you just like my portfolio. I will get back to you. Don't forget to like the video out. It helps me out tremendously. And that's about it. I will catch y'all on the next one. Peace.